Luxury home sales are down 17.8% year over year. You're definitely going to want to watch this one. Redfin just came out with a study this past week that throughout the entire country, luxury home sales are down 17.8% year over year from their peak in 2021, and this is through the month of April here. And what we also saw is that peak in the month of April in 2021, we saw a 23.6% drop from April 2021 to the pre-pandemic numbers in February of 2020. So what does this all mean? What does that tell us? Here's what I know. After the pandemic hit, we saw rates drop to record low numbers. We saw the luxury market explode. There were more high-end premium property transactions than I've ever seen in the past 21 years because it was easier to afford these homes. It cost less to buy them. The value of the dollar from a mortgage financing perspective went down. Money was cheap. And as a result, now that we've seen rates creep up, we're seeing a return to normalcy in the high-end market, just like what we're seeing with the remainder of the market. And luxury can mean a lot of different things in a lot of different places. What I know is that in our local marketplace, in the Philadelphia metro area, in the city of Philadelphia, only 2.16% of all the homes that sold through the first quarter were above $1 million. And in the suburban counties, that number was 3.9% of all the homes that sold were above $1 million. So very clearly, the luxury and premium market is definitely over $1 million. I would argue it's in that 700 to 800 range, depending on where you are. We know it's a very diverse market in a lot of places. And seeing that this market is softening tells me a couple of things. One, sellers, if you have a premium home you're trying to sell, you might have missed the opportunity to cash out high. And we're seeing the market very clearly shift. And the first place the market shifts is in the high end, because that's the most expensive part of the market. And seeing rates jump from less than 3 to into the 5s on a 30-year fixed, and jumbo rates are going to be even a little higher, it just costs a lot more to buy that home right now. And the market is responding to that in line with the Redfin report. So if I'm a seller in that price point, in that segment of the market, I'm looking at getting my home on the market as quickly as possible, because inventory is still low. We're still less than a month's supply in the suburbs, and we are still less than 2 months supply in the city of Philadelphia. I'd be getting to the market sooner because there's going to be more of these homes that come to the market. You want to be the seller that gets ahead of the market and beats the competition, not list when you've got 2, 3, 4 other homes that you're directly competing with. Because the second thing here to take away is that there's just less buyers at these higher price points. If you're only working 3.9% of the market, then that's got to be a real niche market for you. And in our marketplace, the high end is a lot different than places like Los Angeles or New York City or Miami Beach or wherever you want to compare them to. So I'd be looking at, one, again, we're seeing the market soften in the high end. Two, I'd be looking to get my home on the market as soon as possible to beat the competition, because when opportunity is at its highest, urgency tends to trough. This always happens in shifting markets, and then when people see the market go the other way, they immediately move. So I'd be moving my plans up dramatically if I'm a seller in this price point. Buyers, you want to be looking at 3 things in this segment of the market. One, is this the right home for you? Because this is a big investment. You want to make sure it's going to be right. Secondly, if you see something that's maybe 60 to 70% of what you want, and it's in the right location, or there has the right floor plan, which is a lot tougher to change, you may want to move on that now, because with rates projected to go up, it's still going to cost you more even if the market softens a little bit there. And right now, we're not talking about prices softening. We're talking about residential sales activity softening. Big difference. So all this tells me is that a seller in this market, there's not going to be as many buyers coming in. The absorption is going to be a little slower. A buyer in this segment of the market, if you find something that's close, you probably want to move on it, because with rates increasing, it's likely going to cost you more to get that premium home that you're looking for. And this is a major indicator for the rest of the market. We've been talking about a deceleration, and it started to happen in the high end. I take note for everyone looking at lower price points, because it's going to be happening to your segment of the market next.